welcome. And today we're going to have our weekly strategy roundtable where we talk about current market conditions, oil prices, the war in Iran, earnings season, private credit, and figure out where the opportunity is in the market. For those of you who are new, welcome. This is my brief bio. My background is in technology. I have my master's degree in computer science close to 25 years ago. Were special concentration in AI, and then I worked as a CTO, kind of a senior executive in several startups, fintech startups here in Chicago. One of them was Options Express, online broker dealer, Big Six, hedge funds. So my background is building technology for fintech companies. Started Tradespoon in Yellow Tunnel in 2012, so 14 years ago. And about 2 years ago, Keith Harwood joined me from Option Hotline, and he brings a lot of experience from the hedge fund perspective, from the market maker perspective. So he has a lot of industry experience in trading options, future market making, and deep knowledge of options and futures trading, as well as equity trading. So that's our background. In terms of disclosures, I'm going to go through specific trade ideas and some of the live positions that I currently have. So it's important to look at the optionscreening.com. If you haven't visited this link on your screen, I encourage you to do that. Oh, I forgot my webcam. Let's see if that works. It actually does. Okay. The only problem is that doesn't look good. I wonder why it's doing that. We'll do it like that. Distance. Stalls and gaps. Okay, I'll do it like this. I'll have to fix the camera. It's weird. It wasn't doing that before. Okay. Find your video call. Okay. Okay, so wonder. Sorry about that. Let me just see if I want to adjust this. Probably not. All right, we'll do this out. Well, let's keep adjusting and leaving the space. Interesting. Nice. Okay, so hopefully that's better. I'm not sure if it's really better, but a little bit better. Okay. Sorry about that. It's fine before. No, I have to take a note. Sorry about that. All right, so that's disclosures. So I'm going to go through some live trading example. I apologize for the delay. So let's jump into the market, right? If you look at what happened in the past since the war started in Iran, right? The oil prices jumped to above 100 level, right? Let's look at the crude oil. They have dropped back to the 92 level. So there's still negotiations are still alive. And it looks like they're gonna, push the ceasefire further out. And crude oil was as high as 115, 120, and it's back to 92 level. I mean, it's still higher than the pre-war level, right? And Brent crude oil is also above 95 level, but they're significantly less than they were as soon as there was a ceasefire, right, announced earlier last week. So crude oil has dropped significantly. 10-year yield also dropped below 430, right? We're retesting the 430 level. And dollar pulled back to 98 level. So dollar is back to pre-war level, right? Interest rates are also back to, pre-war they were actually at 4%, but in March. But in February they were at 430 level. In January they were at 430 level. And this has been a long-term support level, right? Anything above 430 considered to be, expectation of high inflation. Anything below considered to be the, economy is expanding and Fed will cut interest rates, right? With the start of the war, it's questionable whether the interest rates will be cut or not. We do have a new Fed chair starting, I think, middle of May. So that will also create some uncertainty in terms of path forward for interest rates. But in terms of VIX, very little concern, right? VIX is back to before the war level at 18 level, right? It slowly was going higher in January, February, but it's back to the 18 level. And spiders, right? I like to look at the SPX level. We are back to all-time highs, right? We're back to all-time highs. Another up day, up 1%. And SPX is trading at the 7,000 level, right? So the question is it going to be able to break to the 7,000 level, or will it pull back, right? We do have start of the earnings season. So there is still uncertainty about the Middle East, and there is still uncertainty what kind of effect does the private credit has on the financial companies and software companies. So today we had Citigroup trades at 130, up 3%. JP Morgan had earnings today. It's even though it's a record revenue, but still they in terms of revenue from the interest rate, because the interest rates were high. JP Morgan is actually, they currently kind of down 70 basis points. So no effect, earnings has no effect on the stock price. You can see Wells Fargo actually pulled back, again, blaming interest rates on how much they earn. So Wells Fargo is down. Goldman Sachs had a strong record revenue from the equity trading. They missed on the bond trading. And the Goldman Sachs originally was down, right, as high as low as 860. Now it's basically similar to JP Morgan, at the same level as before the earnings, right? And right now, Goldman Sachs is still up. Delta Airline had earnings, right, in terms of some of the companies. So you can see original reaction was strong, right? Despite high oil prices, they're still generating revenue and meeting expectations. But then when the oil prices went higher, it's very sensitive to the oil prices, right, to the jet fuel in airlines, and it pulled back to kind of lost all of the momentum for the earnings, and now it's back up to the same level as before the earnings. So far, I would say, it's still too early. We're only into second day of earnings. We had, Goldman Sachs, JP Morgan. But so far, obviously, reaction in the market is still positive because we are trading at almost at all-time high, right? So basically, even higher than pre-war. And this downtrend, we're breaking above that. So the question is, will we be able to break through the 7,000 level? Is there enough momentum behind the earnings season and seasonality, right? Usually, that April, May, June has been a very strong months, right? If I looked at April, June from seasonality perspective, right? Last year, right, when we had first phase of Liberation Day, right, market reached April 7th, right, and kind of continued to rally. And at the bottom, we reached at April, right? First week of April. In 24, right, when we had the, we had a pullback was the credit issues in the regional banks. Some of the regional banks defaulted. Again, reached the bottom, and then from seasonality point of view, we had a strong, April, May, June. And, that's usually from seasonality point, very strong months. So is the seasonality and the earnings momentum enough for SPX to continue to grind higher and push higher? Well, we'll see. We'll see, right? We'll see seasonality and earnings confirm this trend. We obviously had a V-shaped recovery and at all-time high again. If you look at this, our model, aggressive power trader, on yellow tile, you can see in terms of spiders, it did see that we're, could reach 688, right? But in a month or two, it does see a breakout. So it does see eventually in the next 3 months that we do break 7,000 level on SPX. Whether this happens in April or May, we'll see it shortly, right? We're at all-time high. I assume there'll be some kind of consolidation at these levels because we couldn't break it since October. So I assume there'll be some kind of consolidation, but I would still be at this point buyer into pullbacks, right? Buyers into pullbacks. If you look at the positioning data, right? We talked about positioning data, or if we look at the avant-garde, let's look at avant-garde as well. So we are approaching April expiration, right? This Friday is April expiration, something to keep in mind. You want to kind of address your April position. If you're still bullish on the position, then you might want to roll it into May or June. Same thing for bearish position. But you can see at the 700, most of the positioning, right? If I look at the positioning level, right, we're right at that 7,000 level, and same thing is on SPX, right? So there's a very high open interest, and at least till April, it might take some consolidation as we're approaching the tax day, is also tomorrow. But after April expires this Friday, right, and then a lot of the positions are in June, it does kind of open the door that if there is no escalation in Middle East and earnings are better than expected, that we could break the 700 level, right? And same thing goes for negative news. If there's, after April expiration, there's escalation in Middle East and earnings season are not as strong, then you do have a pullback. Obviously, right now, momentum is behind the bulls. Right, you can see it on yellow tunnel. right? In terms of momentum, going to as high as 760. If you look at the bar chart data, I mean, same idea. Very high open interest at the 7,000. We do have majority, largest position is April, which expires over $100 billion. But then June is already well positioned, right? So that is supported for the market to continue to grind higher, right? So the question is, what's going to happen in, going, now that April is behind us, let's look at May expiration, right? Let's look at May, and we can look at June expiration. They have been pretty robust and strong, right? So you can see, on one hand, we're breaking through the 700 level. There's already a lot of opening position. A lot of people are opening position at 7,100. All right, but so we break through the 7,000, we get to 7,100, as high as 7,200. On the downside, gamma flip is around 67.42 right now, in terms of market being supportive, and dealers haven't forced to buy if the market pulls back, is 6,700, right? And trading is about, probability of distribution of possible outcomes, right? The probability. So if you look at the, let me see. I'll do it here. Right, so if you think about probability curve, it looks like something like this, right? Where one standard deviation, we trade somewhere at 6,700, right? 6,600, and the other, and if there's negative news, at 7,200, right? 7,200, maybe 7,100. So scenario number one, we break through these 771 and trade at 7,200, right? So that's scenario number one, right? Break through the 7,000. Scenario number two, I mean, we're already at 7,000, so it's reasonable to expect that we could get to 7,200 very quickly. It's maybe in 7,100, but still, there's uncertainty about geopolitical risk, and oil is still at 100. And as long as oil remains close to 100, for the month of March, for the months of April, and if it spills into May and there is still no agreement, right? We're just pushing can down the road, then we know that, we're a service-based economy. The United States is a service-based economy supported by consumer, and if consumer has to pay, twice as much money at the gas pump, that means he'll spend or she'll spend less money on the discretionary items. So scenario number three, we revisit the lows, right? 6,500, right? 6,300. I think we were as low as 6,300, right? So scenario two, we're trading in this range, 6,700 to 7,200. Scenario number one, maybe even higher. Scenario three, we revisit the lows, right? And why this exercise is important? Because you wanted to determine how much money you're willing to risk in the market, right? The idea is not to be down more than 10 to 15%. A lot of our on all our subscription basically tells you that, we have signals, you can have up to 4 positions at a time with maximum loss of 2.5%. But this is something you wanted to always go through this exercise, whether you're looking at the May, June, or you might want to, 0 days till expiration, look at the end of today, tomorrow, or if you're doing momentum trading, maybe look for the couple of weeks, but you want to look at the options data, right, and this positioning level, and see, where, support and resistance levels are, and how much money are you willing to risk. So how many of you say one? We are, we're going higher. Two, Alex, welcome back. So one going higher, 7,200, 7,100. Two, we're trading in the range, and three, pulling back. Right, some of you said one, nobody said three. I'm going to go with two. I still think there's a lot of uncertainty in the market, and I think by May, June, I think we can break 7,000. I think we will have a breakout when we're almost there. So all it takes is just one good news, and we can be about 7,000. But you know, I wouldn't be surprised if we revisit 6,700 if there is any escalation in Middle East, right? Or oil, you know, end of April, end of May, oil is still at 100. Then you know, then there is a high probability that we're going to revisit the lows. All right, but meanwhile, right, if you look at the momentum, right, short-term maximum, right, very strong short-term momentum, right, from these oversold conditions, and medium-term soft, long-term soft trend, and medium-term average trend. So I would agree with that the momentum behind the pools was deteriorating, right? SPX momentum was deteriorating, you know, since January, right? It was just a pattern of higher lows. So now the question is, you know, is there enough momentum to break through the 7,000 level, right? And that might take some time, right? It might take a few weeks at least to break through this. So I would be a buyer into pullbacks. How do we help? We have different models. We have aggressive power trader model. You can see industrials, stocks like GV already breaking out and making new all-time highs. Caterpillar is in that category. Banks, financials, companies like Citigroup, right? It broke out after the earnings today, so it broke to the 124 level, trading at 130. So you do have some financials are heading higher. PNC announced an earnings, so just be careful. And you can see the history of these signals, right? You can see, okay, well, what was it yesterday? What was the signal yesterday? Netflix, right? Netflix is in strong uptrend, right? So that was a signal yesterday. The idea is to hold the position for 1 or 2 days, right? You hold the position for 1 or 2 days. You can hold it for a week or two, right? The signal is for short-term trading, but if you see there is a momentum behind the Netflix, you can hold it longer, right? And the idea is that, you know, it's been 75% accurate in terms of all the testing we have done on real positions and back test. And the idea is to have 4 out of 5, 4 positions, right? 4 positions with maximum exposure at 2.5%. So that's aggressive power trading. You can also look at the weekly power trader. Right, the weekly power trader. The model runs every weekend, right? So it analyzes more data, right? Bigger data set and makes longer term predictions. And you can see, you know, this week was Apple. I traded Apple this week, so you can actually see some of the trades I've done. I was able to buy at $3, you know, close at $3.80 today. I still have Apple position. I do have Apple stock position. But this is some of the examples that some of these trades actually do. You can see my orders, you can see my positions, you can look at the history of the trades, you can enter SMS if you have a phone number to get the SMS messages. You can analyze if you know if you want to have your own signal that has options data. You know, you can look at NVIDIA and it'll tell you what the model sees on NVIDIA, right? That you know, next 10 days reaching 209 level, and then 1 month, 2 months, 3 months, potentially going to that 190, 200. But it doesn't only for the next 10 days. Momentum is behind the NVIDIA, so you know the model see that potentially it can break through that level, 200, right, in the next 10 days if this momentum persists. And you can watch the recording, live trading room recordings. Dynamic power trading is actually all of my orders and positions. Same thing, you can enter your phone number to get SMS message. You can go to orders. You know, I closed STLD stock position today. I closed Apple option position. I trimmed my JetQ position. I closed the QQQ hedge. So it's a combination of stock and option trades. You can see both stock and option trades. You can see all the live positions. Next is earnings power trader. We're in the middle of the earnings season, so I do trade earnings. You have example of JP Morgan, right? JP Morgan, I sold put spread and I sold call spread. So I encounter sometimes I'm long volatility, sometimes I'm short. I did not anticipate JP Morgan to make that 2 standard deviation move. because of all the concerns I mentioned. So I sold put spread, call spread, collected 71 cents in this example. So my maximum profit is 70 cents. My maximum loss is $1.80. The difference in strikes minus the premium. But in terms of return, but in terms of probability of success, the odds are on my side because I assume that JP Morgan will not move one standard deviation. And right now it's trading. The put spread is trading around 10 cents. I'm about to exit the position. And keep the premium. So that's an example of the earnings power trader in the middle of the earnings season. Every week there's earnings, every day there's earnings, and I discuss them in the closing bell. And finally, if you're more comfortable trading stock or options, we do have Profit Accelerator, right? Profit Accelerator in terms of orders and positions. We do send a webinar blog. So every Sunday, please create an account. If you don't have a yellow thumb account, create one. If you forgot the password, you can just click log out, type in password. Forgot password, you'll get a password. But every Sunday, we do send trade idea of the week, right, along with the description of my personal, and some of the recent trades and trade idea. And we have webinar, right, recordings. We have a lot of content on trading psychology, which you also have access to, which I encourage you to also review. Any questions so far? If you're looking for help in trading plan, we have one-on-one coaching program. You can schedule consultation. First consultation is for free with Keith, and he can help you with the trading plan. Or if you have any other questions on your subscription, I'm going to drop that here. I know some of you already talked to Keith. If not, then this is opportunity. Schedule consultation. He can help you, just guide you through the website, how to use the website, or help you with the trading plan. Or if you need more than just 25 minutes, schedule one-on-one, do a coaching. And the other thing, we do have auto trading program with Avantgarde. So we do have marketing relationship with Avantgarde, and we do have Avantgarde. You can get the lower commissions when you trade, 65 cents a contract. They have broker assisted trade, auto execute trades. I think they are $15 a trade. $15 a trade. Right, but this is something you can also take advantage if you don't have time to watch, SMS messages, or you need broker assisted trades to help you navigate the market volatility. Or just every time I trade, you trade, right? The Apple trade, if you weren't in the live trading room, right now the trade is behind. So, that gives you an advantage. So I'm gonna post that link on the screen as well. Any other questions? Alex, Chuck, Kirill, Martin, Raju, Bill. All right, we have a lot of new names. Some of the people, Martin, welcome back. Thank you for subscription. Roger, thank you for subscription. Kirill, thank you. Alex, thank you guys. You're, longer term, some of you very long, some of you, a few months, some of you a few years. So I appreciate your time being here. Keep an eye on emails for Sunday. Try to participate in the webinar. Watch the participate in live trading room. If you don't have time to participate, at least please watch the recording so you're up to date on the, where we're going. And, I like AGV, right? Software names, nice rebound, did not break down. So you see companies like Microsoft are in strong rebound. So that's optimistic. Still a pretty, bearish looking chart, but going into the earnings, maybe this continues. But first thing first, dollar I think is going in the right direction, so that's positive. Right? I would watch the dollar. As long as dollar continues to deteriorate, market is going to rally. 10-year yield is below 430. That's also very positive. We want to continue the rate to drop. And SPX, right, 7,000 level. At this point, I would trim some of your long exposure, maybe raise cash. I sold JEPQ, I sold my QQQ put spread. I would, raise cash that if we do revisit 6,800 or we revisit 6,700, I think that would be a good opportunities to add to your portfolio. That's all I have for today. Thank you very much and have a great day.